Hello, everyone. Welcome to the weekly roundup. Today we will cover interest rates, yields, and earnings releases. Hello, Ben.
Hi, Eva.
How's it going?
Going pretty good. Pretty good. You?
It's okay. The great weather, but and I mean we go from cold and then we see a heat wave.
I know. I know. Yeah, you never know what to prepare for.
Uh, right. Okay, let's get right into it. So the BOC and the Feds are expected to hold their July meetings next week. What are our expectations for interest rate decisions?
Yeah, so it's a great question. I think as we've covered the last little while, that it's been a little bit of an uptick in inflation around the trade and tariff wars, and there's maybe some fears, at least south of the border, that inflation is going to come back with earnest. And if you look at it big picture, tariffs tend to cause inflation to the countries that put them on, and typically tend to cause deflation to the other countries that are impacted. So I'd say certainly the U.S. has some risk of inflation ticking up. And there's, I'd say, a zero probability that they cut rates next week unless somehow Chair Powell is removed from his job and somebody's put in his place. I'd say pretty low percent chance that they're going to cut rates in the U.S. At that meeting. But if you look at the forward curve on rates, the U.S. still looks like there'll be rate cuts coming down in the back half of this year. How much? 50 to 75 basis points, depending on how things progress here. I do think that they're behind the curve from that perspective because unemployment's a little bit slower and high rates are causing pressure on the consumer down there. But no cuts for the U.S. As for Canada next week, again, probabilities are right now 12% that they're going to cut rates. Our economics team thinks that they should. And we're still pricing in 3 cuts this year. And after this meeting, there's only 3 more meetings. So that'd be September, October, December. So we do anticipate Canada to continue to come down. And that lines up with our view that the economy continues to contract in Canada. And some of that has to do with tariffs, some of it has to do with slowing demand. And we also think inflation's coming down and not something we necessarily need to be worried about. But that would be, I guess, our take for next week. No cuts next week.
Okay. Speaking on tariffs, President Trump announced a couple of trade deals this week with Japan and the EU. Could this signal, some sort of global trade stability, or are we just seeing a breather before the next round of tariff tensions?
A good question. I guess I'd like to think that it is some kind of increased stability, but I think that's probably not the case. Japan and the US are big trading partners, so this is a big deal. I don't know that President Trump likes stability. Instability, actually, I think, is more of the place he likes to land. And, the market seems to have adapted to the fact that there's announcements and deals, and, not many of the deals that he's put in place so far has come to fruition. So, certainly, I guess it'd be more helpful, more for the companies than I guess for the markets and the outsiders. If companies want to plan for future projections, future plant development, future R&D, and CapEx spend, then knowing what they're paying in tax or tariffs are going to help them decide on how they deploy capital. But outside in, don't think it's too big a deal. US and Europe, again, we'll see. There's so much to put in place with all the individual companies in Europe that I don't think it's anywhere close to done. But yes, headline looks positive. Maybe he's coming to an agreement. Yeah, I think everyone that I talk to, at least in the space, seems to think that a 10% global tariff is likely where all of this lands. And again, that will result in higher prices for Americans. So we'll see what that means.
Okay, speaking on markets, the expectation is that the yield curve starts to flatten at some point. What are the risks to this, and what does it signal for future growth?
So if you look at a traditional sense, flattening yield curve, at least on the long end, means the world is expecting lower economic activity. And so, I think that's the traditional economic thinking way of it. We'll say the more financially manufactured way would be central bank intervention. So we saw decades of Japan really forcing down that long end. And so they effectively pegged yields. And so they say, at we're not happy unless the 10-year and 30-year are at 2%. And then if you get a creep above those levels, they buy it and push it back down. And so and we saw some of this with Bernanke in 2018, where we had what's called Operation Twist, where they sold short dated bonds and bought long dated bonds to flatten down the curve as well. And that's to help the consumer and the American people. So I think the question that I'm struggling with a bit right now is it flattening because we think economic activity is slowing, or is it going to flatten because the government intervenes? And so I think either way, the long end comes down because that 5% level puts a lot of pressure on the U.S. consumer. So, but I think it's two schools of thought. One, and both of them I still have to flush out and think about how and what are the additional ramifications of it. If it's the yield curve control version, probably causes some ripples through the economic or through the equity markets and result in likely lower equity prices.
It's like we throw out everything we learned in economics.
That's right.
So some more earnings releases this week. The Magnificent Seven has started to report and some other big names. Any early trends or surprises?
So big night tonight. So we're recording a little bit early this week. So July 23rd. So tonight is Tesla and Google. So these will be big factors to see what and how they play out. Right now, Tesla's up and Google's down into the earnings. I'd likely think that their earnings are probably pretty decent in both cases. We had Thermal Fisher report with positive earnings on the pharma side today. The stock was up 10%, but a lot of the pharmas and healthcares have been slaughtered. So even a slight revision to the upside results in a pop in stock prices. So yeah, I think this will be interesting to see how these two report. Google, I think I have to think they still have good numbers. What I would look for in their earnings is what's happening with AI, how much money and attention is going towards it. Google is an advertising machine, is where they make all the revenue. So decent gauge too to see what the U.S. corporations are like, because they global corporations, what their spend's like in advertising. So I'd be watching that. Tesla's been so volatile, more based on Musk's relationship with Trump as opposed to the fundamentals of the company. I think the fundamentals of the company will be pretty decent tonight, but be worth watching.
Okay, let's see the charts.
Okay. Just let me know when it's good to go.
Good to go.
All right, perfect. As I said, we're recording on July 23rd. It's around 3 o'clock. So if anything happens between now and then, we'll comment on in the update, in the next update. So lots of things to go on, but certainly as we talk about economic activity, so this is recent updated data that we put out. And, Canada, as I mentioned, slowing growth expected. If you look at our current forecast versus Stats Canada's forecast, so we're actually expecting better economic activity. So our current one's actually a little bit better than initially expected this year. We still think we see November, December negative GDP. But we're revising our expectations a little bit higher in 2025 by the end of this year. Now, if we look out to 2026, and as you look at Stats Canada would be the gray one, this would be our previous forecast and then current forecast for 2026. And so, yeah, again, kind of similar school of thought where the markets lead the economy. So if we're anticipating 2026 economic activity slowing down, should we be anticipating stock prices slowing down in the back half of this year? That's a big question mark right now for me with the Canadian market. We've had financials and, of course, metals and miners been leading the way here, but energy and oil and gas, natural gas hitting lows have certainly been underperforming. So 2026 is going to be an important year for the economy. And what happens to the markets at that point, I guess we're going to see. But with yields starting at a higher level, that gives us the ability to have some bonds. That's going to help stabilize the portfolio through the next 12 to 18 months. And then if we look out to 2026, our current forecast has been revised a little bit lower in 2027, but we still expect economic activity to pick up. Lots of ground to cover between now and then, but it's a good way to think about the fact that as new data comes in, you have to update your forecast, and your forecasts are changing quite quickly. We have to make some suggestions and changes for what that might look like. So one of the other key pieces, as I mentioned, was the overnight rate. And so as we look at Canadian numbers here, this top line here is what everyone sees on the headline. So overnight rate. So, we're looking at our expectation is that rates come down to 2% by the end of this year, which is this level here. And we're certainly at 2.75 right now. And so we're expecting another, as I say, 3 cuts before we get to the end of this year. I'd say the other key piece slash call out here would just be where US dollar goes. We think the Canadian dollar appreciates over the next little while. And so that'll be an important piece to watch and think about what you want to do with your US CAD. And if you are planning to travel again next year, probably no rush to wait to convert just yet. And oil prices, we think, are pretty stable over the next 2-3 quarters. So in this kind of $60 range, but that'll be really contingent on how the economy moves from here. Other couple of callouts I'd look along the bottom line here would be unemployment rate. So we're anticipating unemployment continues to rise as we move towards the end of this year. Yeah, this is the other reason why you think that rates probably come down. Unemployment rising, economy slowing, usually results in the bank taking action, and they did a while back. A year and a half ago now, they started to take action, and I think that's really helped Canada from a perspective of not going as deep in the contraction. Next one would be China real GDP. So saw the second quarter was 5.2% growth, which was better than expected. My view still is this economy has lots of potential, the Chinese economy. So we've seen a lot of write-downs in housing. We've seen a lot of write-downs in the financials. We've seen the central bank intervene, pushing rates down. And so that has helped stabilizing, but they really haven't hit their foot on the gas yet for stimulus yet. And so my view continues to be that there is lots of upside and potential. We look at a lot of the companies here, even like an Alibaba versus an Amazon. Alibaba trades at like 10, 12 times earnings versus an Amazon at 30 times earnings. So I still think that there's opportunity here, and continue to watch and pay attention to how this economy moves forward from this point. I'd say the last piece just before we wrap on this is just narrow leadership. I mean, it's been something that we've talked about for 2-3 years now, probably. As the economy continues to grow and markets appreciate, which you get typically when a long-term run, which we've seen about a 4 or 5 year run now in equities, you get that contraction as the markets go up in value. The bigger companies become bigger and bigger because it's a market cap weighted index. And so if you look at the year to date, quarter to date, anyways, which is IT, that's been driving a lot of the return in the second quarter of this. So driven by IT and telecom, I mean, these are basically the same things. IT and telecom, very similar businesses, but they've been driving the return over the last quarter. So not sure that's going to continue to sustain itself, but that's what we're seeing, this concentration in the big names starting to make me feel like we have some risks here that we need to address, either taking some profits on or finding a way to provide some protection into portfolios at this point. As always, the opinions expressed in here are not necessarily those of National Bank Financial. Should you have any questions, please contact myself or your advisor, and they're happy to address if any of these things are appropriate for your portfolio. As always, I appreciate any feedback and comments you may have around the charts of the day.
Great. Thank you, Ben.
Welcome.
So what's on the agenda for next week?
Yeah, so we get into the end of the month on Thursday. Wednesday, big day. That's the U.S. and Canada central bank meetings. So those will be important to watch. And then the ECB on Thursday. But ECB is not going to cut either. So I think we'll be watching to see what happens. What do they say? What do they say around the decisions? I think always interesting to see what Chair Powell has to say about his position as well and what he's thinking about. So we'll be watching the press conferences around then. Bank of Canada as well. We'll be reading through and taking a look at their comments just around where and what they think's happening. You know, our economics team thinks that they're underestimating the unemployment numbers and think our unemployment levels rising faster than they're expecting. So we'll be looking to see if their thoughts have changed that way. As well, that inflation number, as you know, we do think we're in a more of a deflationary. We're starting to see inflation come down, and so we'll be looking at seeing what their forecasts are. Are they starting to line up with that and thinking that the economy is contracting as well? So that those would be really kind of the key areas to watch. Obviously, if there's any tariff announcements between now and then, we'll go through those. But I'd say the key pieces will be what the central bank's saying next week.
Okay, great. Thank you. Thank you, everyone. Remember to visit, subscribe, and follow us on YouTube and LinkedIn at Hart Investment Group. The link to our daily financial heartbeats will be in the caption of this video, as well as in your email box. For our clients, please reach out to me if you have any questions or if you'd like to book a portfolio review meeting with Ben. Thank you once again for listening and enjoy the rest of your week. Bye.
Thanks, everybody. Bye.